was more to do with broad-basing the ownership, giving an opportunity to the investing public to be a part of the First Capital story, to be a part of performance. First, we were also keen to increase liquidity on our shares, so that's one reason also that we looked at. And even though we've already listed by virtue of debt, we felt that on an ongoing basis to have the required corporate governance standards, that it'll be useful to be listed. One final point is that last year's budget also did give a tax incentive to get listed, and we will obviously make use of that incentive through this process as well. So I mean, it's the only risk-free asset class you have in Sri Lanka. Government securities are perceived risk-free. The government is your counterpart there. They would never default or have the ability to essentially reissue securities. So the default wouldn't happen. So technically, an environment that has certain uncertainties like what you see today, the pandemic, you're not sure of your counterparts, you're not sure of financial institute stability. This is the safest asset class that you can invest in. So like I said, First Capital Treasuries is maintaining 100% government securities portfolio. We've not diluted our balance sheet, and the assets that we hold under that entity is all the government securities. So that obviously means that government securities as asset class is a good asset class you won't lose your money on. Like I said, yields are much higher than even some of the other conventional deposits that a lot of people don't know. And the fact that Treasuries then deals in that would allow a potential shareholder also to sort of get the spillover benefits of us, of the entity or the profitability of the entity, and that's why they should look at the asset class as well as the entity, FCT. From my point of view, no, but I guess all investors may have their own opinions. So I think First Capital Treasuries, like I said, the business we are in is very cyclical in nature. The PDs, the primary dealers, make money on a decline of interest rates. That's when the business really can leverage and make large profits. In a rising interest rate environment, it's very difficult to sort of make gains. It's more about managing risk. However, I think investors need to take a medium to long term view. So we are not saying that this is a short term punt in it by any means. We are saying this is a company that has long term value in it. So if you look at our 5-year, 10-year historical performance, you would see why it's so important to maybe hold on to that share. So I would really encourage investors to look at a more medium to long term perspective than a short term nature, because earnings can be a bit volatile in our business. We certainly hope so. Yeah, so like I said, I think we see an opportunity to really broad base, expand, take government securities to the masses via these digital means that have been enabled by the regulator. So therefore, we don't really need branches. We don't really need foot soldiers on the ground. We can do that. So I think by promoting government securities, making the public aware that look, this is the least riskier fixed income product out there, yielding you the highest return, I can't see why someone would say no to it. So I think taking that message out is what we intend doing in the future, and that's where we see growth coming from. Yeah, so I think the fact that fixed income is our bread and butter, right? So we have, apart from the primary dealership, we have fixed income of corporate debt on the debt structuring and trading side. We have unit trusts and fund management. So fixed income has always been our bread and butter, and we invest heavily in research for that. I have not seen any other company out there that does a fixed income research report. We sort of balance our research between equity, so macro, equity, and fixed income. Fixed income plays a large part. So I think our experience, our knowledge, our research capabilities, and the level of input we get from our board, who also, I think, understand the macroeconomic environment, understand the risk, understand the products, is what gives us the edge. So I think we have that over a lot of our competition that probably don't have that capability, and that's why it's important to maybe subscribe for this issue and be a part of this. Yeah, so I think definitely we will probably have a better performance, because the July-September quarter was when we had government security rates climbed by, I think, almost 400 basis points. We had a monetary policy hike, an SRR hike that impacted our earnings for that quarter. I think we will definitely see a better performance in the next quarter, which is the October-December quarter. In terms of the first part of that question, yes, yields have sort of eased off somewhat, but that's more to do with I think temporary demand supply trading activity, not so much in terms of directional change. For us, we still believe that there may be further upside in interest rates, so we will navigate that volatility very carefully. So I think it's a function of monetary policy, it's a function of inflation, it's a function of the macroeconomic stability of the country. So central bank has started tightening rates, right? So a reason for high interest rates definitely is the monetary policy direction that we've seen, and that's something that's happening world over. If you look at all central banks, they have started sort of tightening monetary policy. We've had a long period of loose policy, printing of money by a lot of central banks, and now there's somewhat of a pause and maybe a reversal towards that. So I think that's to do with the macroeconomic environment. Now, what that says about Sri Lanka is, to me, really, is that at least we are doing something that we are looking at these indicators and doing what we think we should. Higher or lower interest rates don't necessarily mean good or bad. I think finding that right corridor is important. So central bank, if you look at its policy direction, is looking at containing inflation, and the increase for the rates is partly because to address inflationary concerns. We've seen inflation climb above 8%. The government's original target is 4 to 6. Now they've said that 8, so it's out of the target, but it's transitionary. So they've taken some action to increase rates. We feel that there may be more pressure for rates to go up further. Again, there, I think for us really is volatility is opportunity. So making use of that opportunity is what we do best. And as long as we can be on the right side and trade and make gains, obviously you see those results coming to FCT and trickling down to the shareholders as well.